This panel discussion is being moderated by none other than Mr. Srivatsava Ganapathy of Eventell. Our participants on the panel are Mr. Philip Newman, the Managing Director of Metals Focus, Mr. Shivanshu Mehta is the Vice President Bullion for MCX, and Mr. Sachin Kothari is the Director for Augmont-Gold for All. Mr. Sachin Kothari specifically heads the Gold for All platform, which is a retail platform for all things gold and gold related for Augmont. As I invite these gentlemen onto the stage, gentlemen, please join us on the stage. Let me quickly give you a brief about our other speakers as well. Mr. Phil Newman is the Managing Director and a founding partner of Metals Focus, which is an independent precious metals consultancy based in London. And before establishing Metal Focus, he was a research director at GFMS, which is now a part of Thomson Reuters for 19 years, where he contributed significantly to key precious metal surveys. Mr. Shivanshu Mehta, Vice President Bullion for MCX, it's a position he's held since April 2011, and with over 2 decades of experience in commodities and metals, he oversees bullion product development and market strategies for MCX. Before MCX, he was with NCTX, but right now, the person holding the fort is Mr. Srivatsava Ganapathy.
Thank you so much, Ruchika. Usually we used to have a price outlook session. What we decided this time by the committee, let's talk more about the demand. We are at historic high level of prices. So therefore, we would like to seek answers to who is creating demand for gold at these prices and how sustainable is such demand. We'll try to understand what's happening outside India first. For that, I request Mr. Phil Newman, the best person, is the MD CEO of Metals Focus. Phil, who is driving the demand for gold globally at this point in time?
First of all, good afternoon, everyone, and thank you for inviting me to be part of the panel this afternoon. I appreciate we're keeping you from lunch. So I think in terms of who is driving demand for gold, I think there are 2 really big areas that we see. The first are institutional investors and high net worth investors, and what's really encouraging them into the gold market are really sort of big, macro concerns. A lot of these concerns really relate to what's happening in the US. So they are concerned about US debt levels and how sustainable that is. They're concerned about the Fed and the independence of the Federal Reserve in the States. And I think the other thing that's driving them and encouraging them to increase their exposure in the gold market is concerns about stagflation in the US. And I would suggest probably we're already there in terms of that third dynamic. I think the other major group of or buyers of gold are really central banks. And that really sort of gathered pace in 2022 following the invasion of Ukraine, with the weaponization of the dollar, with assets being frozen, countries around the world being concerned about that. And we've seen record buying or close to record buying by central banks over the past few years at around the 1,000 ton mark. Now this year it's a little bit lower compared to those levels, but the buying we're seeing is still very substantial. And again, really, I guess the other factor weaving all this together is concerns about the US dollar as that ultimate safe haven. And that really continues to encourage central banks in the market on the buy side.
So do I hear you say this demand from these 2 segments would continue or sustain, especially from the central banks?
Yes. I mean, it may not, again, reach the highs that we've seen the past 3 years. And it could also be the case that, given where gold prices are, for some central banks, maybe they've reached the target share they want gold to be. And so now we see maybe some of these central banks reevaluate that. And of course, with gold prices at record highs, maybe you'll see some central banks pausing their purchases as they wait to see, are these prices sustainable? We see a correction, etc. But I think that shouldn't detract from the fact that we could see, again, very high levels. And I think our forecast for this year at Metals Focus is around the 900, the 800 ton mark, which again is an exceptionally high level, taking that back in terms of where we've seen it historically.
Staying on with the central banks, earlier when I was looking at the data, it used to be countries which are not very friendly to the US, usually like China, Turkey, Russia used to be the major buyers. Do you see a broad spectrum buying across the central banks, or it's still like group with 5 or 6 countries? How distributed is the central bank demand?
Well, that's a very good point. I mean, you're right. Historically, Russia was one of the largest buyers. So China is still very much at the forefront of this. But I think you make a very good point that one of the reasons that you've seen that 1,000 tons or that 800, 900 now for this year is that it's a much larger group of countries. It's no longer restricted, as you're saying. So Turkey is there. We've seen Poland, India, of course. So I think that's what's really exciting. And there's also quite a few countries which haven't been active as well. Now, of course, it's impossible to predict which countries will be buying in the future. But as I said, it's the fact you do have that quite broad group of countries that have been active on the buy side.
Any quick comment on India's reserve? Because currently we are at 11% of our total reserve. It has never been so high. Why is it India doing? I'm just asking a question like, out of curiosity. I don't know the answer. I just wanted to understand why is it like, is India concerned?
Well, I mean, it's really hard to comment on individual countries. And of course, we don't know personally, I don't know what target India has. But again, it's part of that remit of that diversification. And I think it's also really interesting, I guess, looking at it as a slightly different way. If I'm a consumer in India, I guess it reinforces my confidence in gold to see the country buying. And it'll be interesting to see where the RBI takes that in the future.
Can you take us to ETFs? What's happening on the ETFs front as a demand creator across the world? Any trends you see? Any changes in trends?
Well, I think when I mentioned about institutional and high net worth buying, one of the key areas where that manifests itself is in the ETF space. So you continue to see strong demand. Buying this year is up double digit in tonnage terms. And although we haven't hit the record highs in terms of global ETF holdings in volume terms, we've certainly done that from a value point of view. And what's been really interesting is how spread that buying has been. So we've seen very strong demand out of North America, Europe, China, and India as well.
Yes, we are seeing huge growth in ETF demand in India. Thank you so much. With that, we will move to India. Sachin, I'll start with you.
Hi.
You have been in the bullion and especially in the retail side. Can you give us a perspective of what's happening in India on the retail side insofar as bullion is concerned?
So even in India, the things that are happening are very similar to what is happening globally. If you look at India as compared to last year, when the demand was roughly around 800 tons in 24, in 25 we are expecting this overall demand to go down to, let's say, 700 tons. But 70% of this demand is still obviously coming from jewelry, because jewelry is a large component of the demand. But if you look at jewelry overall as compared to last year, Q2 this year, the demand is roughly down by about 15 to 20%. But the good sign here is that this is being compensated by the increasing demand on the investment side. If you look at ETFs, the current AUM of gold ETFs is roughly at around 68,000 tons. About 12 to 15 tons being added in this financial year. Yeah. Let's look at the August figures. August itself, contribution was around 2,000 crores of gold ETFs. Also, there is another element which is adding to the investment demand in India. If you look at the central bank in India, central bank is also piling on the reserves on gold, where they've added about 25 tons of gold to their to the reserve last year. Currently, the reserves are more than around 875 tons as compared to 650 tons about 3 to 4 years back. So there has been considerable buying even from the RBI side. We also see a similar trend on the investment side in coins and other investment avenues. For example, digital gold, though a very small portion of the entire industry, but if you see, the trend in digital gold is also similar to what we are seeing in ETFs, where we are seeing a year-on-year growth of about 40 to 50% in digital gold as well. So what is happening here is, we can observe that the young generation or the young urban population in India is seeing gold more as a financial asset now as compared to a consumption asset. So they don't see gold as a kind of an ornament that they want to wear, but they're looking at gold as an investment opportunity. And now with the increasing gold prices, all the investors see gold to be a part of their portfolio as a diversification tool.
But it's kind of a counterintuitive, no? Because we are seeing gold at all-time high, and yet people want to buy gold. What is happening? Why is it so?
So there are two reasons to it. One, obviously, with the increasing prices and the geopolitical uncertainty, people have faith in gold as an asset. They see gold as a safe haven asset, and they believe that gold is going to give them returns in the future as well. Second, what has happened is, Indians always have this affinity towards gold, and they see it as some kind of a cultural, they have a cultural connection to gold. But what has happened with jewelry particularly is, with the increasing prices in gold, the new generation of India has started seeing gold more in the form of value asset and not as an ornament where they want to buy new designs, because what has happened is they see that their budgets have not increased in proportion to the gold prices for buying jewelry. Whereas investment, the mindset is very different. From investment side, they think about the returns that they'll generate. And that's why we see that a large part of population is going towards investment. And they're truly considering gold as a financial asset.
So in terms of investment, what is the preference pecking order? Which one do they prefer? The physical bars and coins, or the ETFs, or the digital gold, or which kind of customers buy what products?
So fortunately in India, every customer has its own preference. There are customers who want to buy physical gold. There are customers who are okay with having a share or an ETF in their demat account, which is gold. There are customers who are okay with digital gold as well. And India being such a large country and everybody has this fascination towards gold, there is no preference as such per se, but in terms of volume, yes. If you look at ETF, it is the physical gold and coins is obviously the largest contributor in terms of investment demand.
How much it will be?
Even today, 30% of your entire demand is in the form of investment demand. So 30% is around, let's say, 250 tons of gold, and of which for ETF, we are seeing 15-20% going towards ETF, but a large portion is being bought in the form of bars and coins.
What about the digital gold?
Digital gold,
is still for trading or accumulation?
So digital gold, though it has been around for a few years, I would still say that it is still at a very nascent stage. There are some kind of evolution that is happening in the digital gold space, where a lot of self-regulation measures are being brought in by digital gold suppliers. And I see that there is a tremendous growth in digital gold ecosystem as well, but needs to be seen. We see how it goes.
I thank you very much, Mr. Sachin. We never associate exchanges, especially derivative exchanges, with savings and investments. But what MCX has done is that through intensive consumer understanding and retail understanding have kept a variety of products, and there is a fascinating story which is emerging. Mr. Shivanshu, please share us some of the stories where exchange is becoming the default platform for accumulating gold.
No, I think firstly, you said the first sentence absolutely right. Derivatives exchanges are not really supposed to be a point of delivery as such, as per understood norms. But then having said that, they can be probably very good indicators of what is happening at the ground level. Because apart from price discovery and risk management, creating an asset class and helping organize this asset class is something which we passionately try to steer in whichever way. In doing so, we have a sort of a bouquet of, like you rightly said, bouquet of contracts right from the only exchange in the world having a gold petal, 1 gram contract deliverable, 8 grams, the 10 gram coin, and of course the 100 gram and the 1 kg bar in gold. These are all deliverable contracts. I think the ease of holding electronically, because the exchange has e-warehouse receipt management software, accumulating it electronically, holding it, and when they so desire, they can take out the physical gold from the vaults. It comes with a quality assurance. Obviously, it's a regulated platform, and they come in tamper-proof packing wherever required, the coin products I'm talking about. So I think SIP gets enabled because the order book of an exchange carries liquidity and depth at every level, which is unlike a spot market. Not to be prejudiced against any one or the other, but then when you see liquidity and depth and you know that the making charges are something transparently over and above and predefined.
Yeah.
So these are some of the factors which, like what Sachin is saying, a newer variety of customers who are trigger happy or button happy because they want something which is conveniently accessible. I think all these factors are playing out, and we are also seeing that in these smaller denomination contracts, we are seeing liquidity further out into the 4th and 5th month.
Help us understand this smaller contract. Now, let's say 1 gram contract.
Yes.
I get in as an investor, and then on expiry, do I take delivery? What is that like? Or is it how does it happen? Like,
Absolutely. So these are essentially futures contracts, but then at the end of the futures contract, let's say at the end of the month, there's a delivery period.
Every month?
Most of them are monthly,
Okay.
these smaller ones. They come with a staggered delivery period of 1 or 2 days, in some cases 3 days, on which the contract behaves like a spot contract. There is a daily funds pay-in, commodity pay-in, and respective payout, which takes place on a T+1 basis. Once this is actually delivered, it is actually in the electronic form. It gets transacted in a demat form.
Okay.
And there, after the customer can hold it, they can see tally their records via the software of the clearing corporation. And as and when they desire, because it's a vault-to-vault only what we allow. Once they want to take it out, then they can take out the physical. They are all backed by the physical form of those products. Like 1 gram means actually there's a 1 gram coin. 8 gram, of course, the guinea, and the 10 gram we recently launched. So these are all.
So which is the popular among the three?
I think.
Among the retail investors, I'm just trying to
I
understand.
think the gold petal 1 gram has picked up a lot of.
What do they
salience.
do with that actually? Because just out of curiosity, like.
No, I think they accumulate it.
Oh, okay.
We find them
As a gifting one, because it's very popular, I heard in Malaysia.
Yeah. The other thing, Vatsa, I wanted to share, while we are talking more about gold, silver, we introduced the 1 kg bar almost
Okay.
4 years back.
Okay.
And I'm happy to share with this house, with this August gathering, we've had 573 tons of silver delivered, bought by retail investors via that 1 kg format. I'm not even talking about the 30 kg.
30 kg. Oh, wow. Okay.
So that is a pure retail type of a product, like you said.
This
gifting.
is over how many years? It's 1 year or how many?
No. This is over 4 years or so. Yeah.
It's a huge volume even then, like 876 tons over four. Yeah.
So to
Sachin,
that sense, yeah.
you have something to say on this one? Like, what is the preference? Because some of your customers may be using exchange, like, so.
So as I said, every Indian has its own preference of buying gold. But I wanted to add further to what Shivanshu said. Obviously, in the current digital age of India, people are so used to having a frictionless kind of interface where they want to get the transactions executed in the quickest way possible. And that's where a lot of these apps, a lot of these fintech platforms which provide gold to be bought has grown up right now. Also, one more thing to add here, as he mentioned that the petal contract is something that retail customers look up to where they want to buy a 1 gram coin. But what I would also like to add on this is, currently with the prices going up, the fractional buying of gold in the form of SIPs and in the form of buying, let's say, 100 rupee worth of gold has started picking up. This has made gold kind of accessible and affordable to even the smallest of the investor who wants to buy gold in some gram or some form or other.
That's right. Fractionization has really worked to the advantage of certain set of customers. Philip, I'll come back to you on this. is a personal doubt. 2011 we saw gold peaking at 1900, and thereafter next year, 6 years or 5 years, we saw it coming down. Is it going to be different this time?
That's a very good question. I mean, it feels very different because what were yesterday's highs are now the support points, and I think in terms of the price, I think what's been interesting is the credibility that it's built. So if you'd asked me, if I'm honest with you, if you'd asked me 18 months ago when we saw 3,000, and I realized 3,000 feels like a distant memory at the moment, what would I expect? I would have thought there would be a sort of a wall of selling into that, heavy liquidations, etc., and we just didn't see that. So although you would never think, we don't think that any future strength in the price is going to be sort of a straight line up. When it's been driven by institutional or high net worth investors, much to the upside, that does introduce more volatility. And so it does seem likely that you will have bouts of corrections. But for example, even if gold was to fall to 3,400 or even 3,300, that seems like such a strong buying opportunity that I think those prices will be very well defended. So I think that's the first point. And then the points I made at the beginning about what's been attracting investors into the market, none of these are going away. And I didn't even touch on the uncertainty with tariffs, this weaponization of tariffs and the uncertainty that creates. And then, of course, I didn't really speak about geopolitical uncertainty, which is in the background. And so none of these factors are going away. And so I think that does suggest that further upside is likely, whether it's this year or into next year as well.
Excellent. So that means I hear two things. It is different from 2011, what drove the prices up in 2011-12. Currently, what we are seeing is driven by different set of fundamentals, and therefore we are unlikely to see those kind of corrections. And here it is much broader. That's what I understand from what you said.
Yes, and I think in terms of your last point, which is really on the money in the manner of speaking, is that when we go back over the past few years, and I mentioned about the strength of central bank demand, and now we've touched on the strength of ETF buying, it's only in the past year or so, actually probably shorter, frankly, that you've had central bank demand and ETF demand moving in the same direction. Okay. You go back a couple of years, and you had heavy ETF liquidations.
Okay.
Whereas now that's, again, moving in the same
Together,
direction.
yeah.
So I think that's also, is a positive trend, at least for the time being.
Everybody talks about China. Do you see something happening in China on the demand side? Or Asian countries, anything you wanted to,
I mean, we've spoken about Chinese central bank demand, so we can put that to one side. I think it sort of echoes the comments that were made about India in terms of the different speeds of jewellery versus bar, coin as well, but mainly a bar market. And the fact that you've got a jewellery market which is really struggling. We had a lot of weakness last year in the Chinese market. So India has now eclipsed China to be the largest gold jewellery consumer, and that will continue this year. But I think the other thing which is really interesting is that you're now looking at, again, specifically for China, the retail bar market is larger than the jewellery market. And that's really quite an incredible thing to see. And that's just, again, the points that we've seen, the fact that you've got those bullish expectations, concerns about the Chinese economy, how its property market has behaved, again, the uncertainty with the trade war between China and the US. That's gone quieter for the moment, but who knows where that will go. So that's a really interesting dynamic and how that's played out in China.
Thank you. I have 2 minutes, and I want to listen. If you have any questions, maybe 1 or 2 questions from the audience we can take, then we can wrap it up. After that final question to Mr. Philip as well as Mr. Sachin, I would like to know your guidance in terms of future prices, but we will wait for the audience if there is any questions.
Philip, I'll target this to you. You had mentioned about central bank buying. How much of the action would be centered on selling by the IMF?
That's a very good question. I don't think that is really a feature of the market. So the buying has just been, I guess you can call it on market in a manner of speaking, and therefore it's all fallen in terms of contributing to the totality of our demand. So the gross sales, I don't think the IMF has featured. I'll have to stand corrected if anyone in the audience wants to correct that. But I think the buying hasn't really been related to IMF activity at all.
Okay, thank you.
Hello, everyone. I'd like to ask a question for Philip Newman. Philip, you just mentioned that 18 months ago, that 3,000 mark was far-fetched. So how do you see prices in the near term? Do you see prices breaching 4,000 anytime soon?
That is the last question for most Mr. Philip Newman as well as Mr. Sachin Kothari.
Yeah.
If you have any other question, we can take it up.
Also, you mentioned about India demand. Do you see any price sensitive happening because of higher prices? Because India and China are basically a price sensitive market before. But right now we are not seeing that. So what are your thoughts on the price levels and buying from India and China especially?
Thank you. We can start with Mr. Philip. You can take both the questions and then we will have your outlook, Mr. Sachin, on the price expectation, and then we will have the final comment from Mr. Shivanshu. We'll go in that order. Yes. Not on price. You can give a comment on any other aspects which is driving the investment demand.
Okay, so as you said, I'm not sure we thought 3,000 was far-fetched. I wouldn't say that necessarily, but yes, whether you want to trust our price forecasts, given that we didn't really see 3,000, is up to you. So I think 4,000 is a possibility. I wouldn't think for this year. I think if you were to see that this year, that would feel a bit more like a bubble rather than being sustainable. So I think for this year, given where we are, 3,007 is not very bold, but maybe we'll see 3,800 before the end of the year, and then we'll see how it progresses into 2026. Is the Fed's independence challenged? I think that could be a real motivation for investors, and so potentially 4,000 in 2026, but we'll have to wait and see.
Mr. Sachin.
So, yeah, I kind of echo what Philip is saying. I feel that the prices should stabilize at this range in the short term. But yes, 2026 prices can move closer towards $4,000. Also, in terms of when you mentioned about how the price is going to affect the jewelry market in India, you had asked something about that as well, right? So my point of view is that there's a kind of, in a limited way, there will be a lot of innovation that will happen in the jewelry industry, where jewelers will start offering lower caratage of jewelry, like an 18 carat or a 14 carat jewelry, lightweight jewelry, just to, kind of attend to the customer's demand. Because as I mentioned earlier, though the prices have increased, the budgets for buying jewelry have not proportionately increased for the consumers. And that's where the jewelers will have to play a role, where they can try to fit that jewelry piece to the customer's requirement or their budgets.
Thank you. Mr. Shivanshu, quick comment as we close.
Well, I have no view at all on the price. I give that disclaimer. My comment is slightly different. I echo what Sachin just said, that if the demand is elastic to the prevailing price conditions, it becomes very important for jewelers who work on low margins, who work on low fabrication margins, irrespective of the base price, to protect those margins. It's very important that they manage the price risk on regulated exchanges.
Hi, Philip. Philip, I had a question related to the Genius Act being passed in the US, related to real-world tokenization, real-world asset tokenization. Do you see the demand for gold really going up because of the tokenization of gold in the global markets?
I mean, maybe we should take that offline for a longer discussion, because I know we're out of time. But I would say, in short, I don't see that being a price determinant. I mean, I think it's an interesting area, potential for growth, obviously, but I think from a price action standpoint, I don't think that's something we would factor in as being a major determinant, at least for the time being.
So as I understand from the panel, new set of factors are driving the demand for gold, and those factors are likely to prevail, and therefore high prices are going to prevail. Thank you very much for your attention. I hand over the session to